Okay, voila, this is recorded. Hi everyone, my name is Peter. Thanks for the introduction, Celine. And I'm going to talk about the concept of ownership and the principles of steward ownership, but also the movement of steward ownership, which is rising almost everywhere in the world. So I have a lot of material, but if you really have a question, just jump in. Let's make it interactive. That's very okay for me. And so the concept of steward ownership. Ownership, for me, the ownership issue is one of the biggest shortcomings of our time. When we look at the economy of the future, ownership is a very powerful concept that has shaped our economy, shaped our society. It's a structure that creates opportunities, responsibilities, dynamics, rights, and obligations to pursue a goal, to achieve something. But at the same time, private ownership also created social disadvantages and even negative externalities for the world. As the profit perspective sometimes prevailed for shareholders. We call that shareholder primacy. I will talk about that. So this is one of the biggest examples of steward ownership in the world. Patagonia, at September 2022, with a lot of applause, they transformed Patagonia to steward ownership, to Earth as their only shareholder. You all know this, I'm sure. But there are quite a lot of other examples. And these examples, I will come back to them later, these can be very old. So steward ownership is nothing new. It exists for ages. In the 1800s and the 1900s, the first examples came with Bosch and with Zeiss. But suddenly, and now the last 9 years has become a mega relevant again, and the shift towards a new kind of economy with more mission-driven entrepreneurs like you. So steward ownership is balanced. It's a very proven model, but it's also quite new and quite pioneering in some countries. And it can bring something for every company. But the most logic fits is with the most mission-driven entrepreneurs, with impact enterprises, social enterprises, like in this community of BE.IMPACT. And so the concept of ownership, it's something that is not really understood perfectly by everyone. We all talk about this kind of things, how value proposition and companies can become regenerative and restorative, but we have to look at ownership too. I will come back to this model later, because this is quite important, that the left side will only exist if we look at the way we ownership structured in an organization. If there is shareholder primacy, or is it a profit as a lever for impact? I come back to this later, but this is quite an important thing. First, we jump to the why, the externalities of ownership. What is happening with ownership in our world? So ownership is it could look like this. What we saw in Twitter some years ago, that somebody just bought all the power and is now a Roman emperor doing this or this. But ownership is also the second one. If you have a very visionary CEO, like what happens at Danone, but the next quarter or the quarter thereafter, he's just pulled back by the shareholders because their competitors has made a bigger percentage of profit. So Emmanuel Faber, he was very visionary, but he was thrown away by the shareholders. And the third one, ownership can also be this, that 3 years ago, when there was the energy crisis due to Ukraine, there was a lot of profit in big oil. It was more than 3,000 billion euros of profit. And what happened with that profit? It all went back to the shareholders. This was an amazing amount, which was very handy in solving our climate problems, but it all went back to the shareholders. So three big externalities that are happening everywhere in the world. Another aspect is absentee ownership. Absentee ownership is if an owner is just, maybe he or she can live thousands kilometers away and especially don't know or don't feel the company. What is the basis of the success of the company, the values of the company, the DNA of the company. An owner can be very absentee. This is also where the movement of steward ownership started 9 years ago. But there was a the one who started this. His father was the boss of a hospital in Germany, a very flourishing hospital in the middle of a green area. They ate organic meals all the time. That was a very warm, caring environment. But suddenly it was taken over, and it was taken over again, that hospital. And at a certain moment, it was just part of a group of more than 70,000 hospital beds that were managed from Paris and not anymore from Germany. And they made decisions which were clearly not anymore in line with all the values and all the success factors of that hospital. And he went to Paris to look what's happening here to that management. And he saw people, and the answer was, yeah, we just have to do this because we are locked in with our owners and with their profit expectations. He saw that those people who made the decisions were really progressive people themselves, who were eating organic meals at home, but just make decisions which, as an absentee owner, they have no clue what's happening in Germany. So absentee ownership is quite a big problem everywhere in the world. And then the next one is mission drift. That was the one I felt very hard myself some years ago. I was a strategist for impact enterprises, and I saw a couple of times mission drift when investors were coming in and hold power from that moment on, and they were making decisions which were clearly not in line with the original mission and not in line with the long-term impact. So they were pushed to has more short-term profitability, or even were pushed to an exit. This is mission drift. I think you all know one or more examples of mission drift. This is a funny thing, but the corporate trap: build something amazing, get noticed by big corp, sell out, and watch your mission die. So this is happening from time to time, unless you look to ownership and to maybe what can we change in the way we are owned, in the way we are structured as a company. And one of the biggest questions there is this one: not how much is possible, but how much is enough. This is one of the key questions in steward ownership, that there is a non-extractive way of financing a company, non-extractive way to look at returns. But the problem is our economy is totally not made for this. The way we structured our economy is more like this. What Milton Friedman said still in the 70s. And the only social responsibility of business is to increase shareholder value. And what happened in the world, now 50 years later, this is how our economy is built, just to increase shareholder value. I'm very happy that you are looking for different ways. There are a lot of impact entrepreneurs with your problem, with your solution or with your service, that you try to change a certain societal problem. But a lot of companies simply don't. The only business of business is business. This is maybe the best and shortest sentence to explain how our economy is organized. This is what we all see and know in the startup world. We are talking about unicorns. We are talking about the hockey stick curve with some endless growth going to the moon. But this is where the tension is coming in. I explain a little bit more. We know that for almost every company, the natural growth of any value proposition is this green. But what is happening, that if you are if you have investors, there is something missing. We know that it's already something different with impact investors, but still, investors looking more like an expected growth by uncapped returns. We just have to say this is a very not an easy zone to be in, because there is always a pressure to become more extractive. As simply said, there is just not enough room for regenerative actions. Every euro is less for the shareholder if you are surfing this green curve. For example, if you want your supply chain more sustainable, if you want better wages for your colleagues, long-term investments, building partnerships, or distributing value to more shareholders. It's all in the green curve, but this is where it conflicts. And we have to look in another way to return on investment. And this is what is very important in the concept of steward ownership. I will jump to the principles of steward ownership, but it's I'll show you it will be quite a paradigm shift. The paradigm of speaking in how much is enough, and in a non-extractive way of financing a company is quite a paradigm shift. Me myself, it cost me some weeks when I saw it first time some years ago to fully understand what all the consequences of steward ownership were. And this is a paradigm shift, but more and more economists and thought leaders say we have to look at ownership. Like, for sure, you know, Kate Raworth, and she said things like, more than the design of a specific product or service, what matters most is a deep design of the organization itself. So this is what's happening in the world, especially in countries like Germany, the Netherlands, but also America and Denmark, a paradigm shift that we have to rethink ownership and not thinking anymore in just shareholder owned, but what if we are talking about steward ownership? So entrepreneurship is more ownership. So the concept of ownership from a macro perspective, it will be quite important if we really want that companies can jump in to the safety zone within the donut. It's quite important that we look how they are organized, and as I showed you before, their value proposition can be very regenerative or even restorative or sustainable. That's on the way, and this is a very good place to be. But what is happening if the other side is not well structured? I do quite know a lot of companies that have conventional ownership structures, the right side, but they are based on more or less shareholder primacy. And what if we can change it above towards profit as a lever for impact, or even lock in the mission focus? And this is the safety zone where we are. And I saw quite a lot of impact enterprises who are doing this. They have made some regenerative value proposition, but they were owned on a very conventional way. And this is where we have to look at, because there are quite a lot of risks that at a certain moment in time, they are pushed back towards the orange line. Steward ownership is only there on the very pivotal moments of a company. I always say when it's going very good or when it's going very bad, then is steward ownership coming in. So this is where we want that companies are. If we really want a regenerative and distributive economy, we have to make companies that are within these zones. And so what kind of companies we want to build for the future? And it's quite a risk that there are in the orange zone, and then we are just in a linear and quantitative growth economy. And so this is where steward ownership can make some difference. And we for sure have to know exactly what are the principles of steward ownership. Steward ownership, it is true, it's quite a complex concept, but it's only two principles. Steward ownership legally secures two principles. The first principle is self-governance or perpetual independence. And the second one is profit serves purpose for always. So let me explain a little bit deeper what it's about. The first one, self-governance or perpetual independence. That means that in steward-owned company, the control remains always with people actively involved in the business. So this means voting rights belong to the stewards, and those stewards are connected to the company's mission and to the operations. So I've written down here the definition because it's quite important to fully understand. They are considered the best suited to guide a company. And what is the paradigm shift? That voting shares are for the stewards, so they cannot be sold anymore. They cannot be inherited anymore. So they are passed down according to principles we establish up front, And so it means that forever the people with decision power are able and aligned, are actively involved, and a company is forever independent. It's quite a big paradigm shift. So this is the first principle of steward ownership. The second principle of steward ownership, you are structured maybe this way too, that for as much as possible, profit serves purpose. But the difference in steward ownership, we can make this legally binding. In steward-owned companies, the company value cannot be extracted anymore by shareholders. And so these profits are reinvested in the business, or they are, for a certain period of time, used to cover fair returns to investors. Or when there are excess profits at a certain moment, they can be donated to charity too. So the structure keeps the focus on purpose for always, without falling into the imbalance of profit maximization. So this means that we organize a company in a non-extractive way. This profit is a good thing, but profit is especially a lever for more impact. And that there can be a fair share for investors. So it's not how much is possible, but how much is enough. But fair share can be very risk adequate. That's very important to understand. It's not a blank check. It's not that you can't earn money as an investor, but it's always a fair share. It's a capped return. It's not uncapped. That's a big paradigm shift for everybody who's hearing the first time about steward ownership. But all this kind of companies has anchored these two principles in their legal DNA. So we see quite old companies. We see them from everywhere in the world, but also quite a lot of startups. Here in Belgium, we are still pioneering. We researched and we saw that 4 old companies has anchored the 2 steward-owned principles, and they are all related to beer. So the monks of Orval, Rochefort, Westmalle, they have anchored the steward-owned principles in their DNA. But nowadays we are exploring more and more impact entrepreneurs, startups, but also some SMEs, because steward ownership is also used as a tool for succession. This is why it existed even in the 1800s. It was the best way to protect the legacy of the founders of Bosch, of Zeiss, of all the companies that were after. And especially in Denmark, there are quite a lot of big companies that are steward-owned. But nowadays it's growing in the world. We have quite some hundreds or even thousands of steward-owned companies. And all these companies, they have this kind of effects of steward ownership. They are able to think long-term in a short-term way. They are mission-driven for always. And they are protected against takeovers. The company is not for sale anymore. And they have all the things in place to serve towards a future-proof economy. So imagine what if a lot of steward-owned companies would exist. We could build a really future-proof economy because they have no incentives anymore for short-term gains. And what we know from a lot of scientific research, especially in Denmark, the last thing is it benefits employees, it benefits the business, and it benefits society. Scientific basis that it has quite a higher survival rate. That the customer loyalty is higher, and especially employee retention is way higher in the steward-owned companies. And you are not working for the third car of your boss. No, you are working for a bigger mission, and that mission is really protected. It makes companies more resilient, and they are equally or even better profitable than non-steward-owned companies. So this is what we know. It's even one of the reasons why Denmark, after the financial crisis in 2009, they didn't go so deep as a country because they were way more resilient. They have buffered enough those companies. And since 2016, there is kind of a big movement raised, which is steward ownership. The term is coined only in 2016. It was by exploring the history of business And what they saw in Germany is that more than 100 companies invented steward ownership next to each other without knowing from each other that they had also such a kind of structure. So they invented things to anchor those kind of effects, like I showed you before. And nowadays, it's going very fast in the world. The movement of steward ownership is growing. We are now here in Belgium too. And our goal is to accelerate steward ownership. And since the moment we started in October, there are quite a lot of other countries where the same kind of movement started. And it's quite a complex thing because legally it's not so easy to do. We do need some legal hacks. We studied it the last 2 years. And since a couple of months, we exactly know how to do it in Belgium, how to split ownership in two things. That's quite a paradigm shift too. We always thought that ownership is one thing, that if you have the money, you have the power too. But we can split ownership in two things. On the one side, it is voting rights. On the other side is economic rights. So have the profit sharing and the decision making. And we make something like a hard line in between for a company. I'll just say some words about how to organize these things. But what is very important is that the voting rights are going to steward shares. They have all the decision power. They can act like full owners. The second one is a legal hack to protect the company forever. That is called a golden share. A golden share has some veto rights. And then on the right side, we have investor shares, we have founder shares, but they have no voting rights. And what is needed in Belgium is that we have a VZW or ASBL on the left side to organize those steward shares. This is the full ownership is here. And then the golden share is structured in a golden share foundation, and this makes the company not for sale anymore. And it also protects the steward ownership principles forever. And on the right side, we're looking for what is the best legal hack to organize profit sharing without voting rights. And this was not so easy in Belgium because the law is always giving some power in certain circumstances to investors or to every share. So this wasn't so easy to do. But this is always the starting point for every exploration for a new steward-owned company in Belgium. And it's always a tailor-made solution, but these are the three legal hacks we are using most of the time. And it's more or less the same what we know from Patagonia. They also organize their voting rights at a trust with full ownership. But the economic rights were to a non-profit, and that non-profit is now helping organizations who are fighting the same societal problem as Patagonia, namely climate change and also biodiversity loss. So that's in every steward-owned company, there is a hard split between the economic rights and the voting rights. So if you want to know more about these legal hacks, go to our website or send me some questions. It's quite complex, but this is the only and the best way to reach steward ownership. And this means if you are steward-owned, that there is a very different way for investors how governance is organized, how returns are organized, and how liquidity can be reached. I'll show you some the real difference between this. And the first one is governance. In a very classical way, like I told before, money equals power. In steward ownership, we lock in the principle forever that entrepreneurship is power. So the most capable, the most aligned people can hold the power. Now, the second one is is to reach liquidity, the very classical way, and you can have a lot of thoughts about that, but yeah, a lot of companies are pushed towards an exit or even an IPO. What is happening in steward ownership that we organize a structured redemption of investments. Shares can be buy back to, and it's with an upfront organized scheme. So you know better as an investor how to reach liquidity. I'll give you some examples later. The third one is the return, and the very classical way is just uncapped. The return can be as high as possible. If it's going to the moon, it's going to the moon. And we see a lot of pushes, especially from classical investors, to go for a hockey stick curve, like I showed you before. In steward ownership, it is capped, but it can be very risk adequate. But we always cap the amount of return that is possible. And it can be high, it can be ×2, ×3, ×10 if needed, if it's risk adequate. But it cannot be an eternal return. And this is quite an important difference. And this is also the starting point for a dialogue with impact investors. And that is what we call steward-owned aligned finance, because during the previous years, there was a lot of innovation to finance steward-owned companies. Because there was the paradigm shift, but how can we organize the finance for steward-owned companies? And these are some terms which are used quite a lot in steward ownership. What is the multiple? What is the liquidity waterfall? And what milestones are there to get to organize return for investors? I know there are some investors here too, and maybe this is the interesting part for you. But the dialogue with investors is always starting from the same perspective, that is, how much is enough? So we really have to talk about these things, not how much is possible, but how much is enough. And we have to talk with investors that rights are split. We have the voting rights. On the left side, we have the economic rights, and there are some veto rights. In the end, I'll explain why this is such an important thing, those kind of veto rights. One of the examples where steward ownership totally failed is OpenAI. OpenAI, the ones behind ChatGPT, they have in 2016, they founded something like a steward ownership structure, but what they didn't do is made veto rights. So in the end, when there was too much money and too much power pressing on that company, it was just not strong enough to survive, simply because they have not made veto rights. And the economic rights, even if there's no decision rights, there can be quite high information rights or even consultancy rights for investors. If there are red flags, then the stewards of a company have to go in dialogue with the investors. So this is quite important. It's even more than in a normal company are the information rights and the consultancy rights, because it's quite important that we also protect the investors and the amount they have invested. And the next thing is, how do we organize such a capped return? So this is quite a difficult thing. We are very lucky that, especially in Germany, they have made a lot of exploration in this. But what we see here is, if there is an investment, for instance, 1 million of investment of a certain impact investor, there are different archetypes on how to get that money back. And the return can be, for instance, it can be, here is ×4. It can be 4 million at a certain moment in time, but it cannot be eternal. And these are different archetypes where how profit distribution can be organized in steward ownership. I know I'm going quite fast, but these are 10 of the ways which are really used in steward-owned companies. So the most easy one to understand is, if you invest 1 million, we organize that if milestones are okay, that in year 10, you will get 4 million back. That is the most easiest one. Or it can be structured like safeguarding a principal amount. You will get your first million back in 4 years, and then later the other 3 million is coming. It can be related to a revenue share, to the turnover. can be related to a demand dividend. If there is a lot of profits, it can go back to the investors. Can also be organized as a cumulative preference dividend. So there is always a fixed dividend in the years where there is profit. And so here are some other ways how to organize the return for investors. Impact goal, it can be even a safe, it can be used. So quite a lot of different ways on how to do so. This is quite complex, I know, but if you're really interested, just have a look on this kind of things, because it's so important that you organize a non-extractive way of finance in a steward-owned company. Only then you can talk about steward ownership. And this is used quite a lot. We call it a liquidity waterfall. What are the options? What are the fixed options that you can do with positive cash flow or with positive returns at the end of each year in a company? And then we organize in a certain phase, 1, 2, 3, 4, 5, it going this way or going this way. And we structure how it can go back to investors in a non-extractive way. This is really important. And at the end, when there are no investors anymore, because they have all their investment back with a multiple, all the profits can go to the enterprise or to society. So a company becomes from itself. It has no financial right holders anymore. And so this is quite a big difference with classic funding. If they're, especially in the startup world, there is you're invested in a company. The company has investment, and they are going towards a certain exit. If not, you are going towards a certain dividend. So this is a very classical way of funding a startup. And what is happening in steward-owned aligned finance is way different. The investment is there, but the return will be organized most of the time using a cash flow waterfall. Or it can be different ways. If turnover is that high, if profit is that high, it goes faster, it goes slower. Or if at year 15 nothing has come back, then the full amount has to come back to the investor. So there's most of the time, it's a combination of different milestones to organize this non-extractive finance. And this is kind of paradigm shift too. But what the good thing is, there are already, or also in more classical structure, the impact investors are already exploring these kind of things. So some of them do know these kind of schemes. So this is it's a very good point. Last thing I will say about this. When I first looked at steward ownership 3 years ago, it was very difficult to finance a startup in a steward-owned structure. Now, 3 years later, it's way easier to do so. There are still some barriers, but 3 years ago, financing 1 million for a steward-owned company was almost impossible. And now we see cases in Germany where impact enterprises are financing 10 million in steward ownership. So the shift is really there. And this is the last graph. I'll show you the difference between classic funding and steward-owned aligned finance. If you are a company that has to raise money, the valuation basis now for very classical thinking, very black-white, I know, but how is the valuation made? Is look like there is a view on what is the potential exits and how is that done nowadays. Most of the time it's just looked as a sector exit multiple. What is the exit multiple, which is very common in a certain sector, in energy, in sustainable fashion, name it. And this is the most important thing to make a valuation now. Or it can be if there are enough cumulative cash flow in the future. But it's not so much what is the realized cumulative cash flow in, for instance, 10 years or 15 years. And this is way different in steward ownership, because if you make evaluation for a capped return, how much is this company worth, how can we structure this organized exit, we are mainly looking to the realized cumulative cash flow. What is the possibility of a company to make enough cash flow to buy back the shares from an investor or to give dividends up to a certain cap to an investor. So this is the most important factor. There can also be a capacity for loan or capacity for other funding. That's also okay. And you don't have to earn all the 4 million in 10 years. But maybe in year 10, they are very able to have another funding to pay back the initial investors. So this is the steward-owned aligned finance difference. And then the next one is, especially for impact investors, this is a hypothetical example, but this is an assumption we really believe in, and that in more and more countries, this is shown, okay, this is happening. Now, what is happening with a classical seed investment, for instance? So an investor invested 10 times 1 billion, for instance, but in a very classical way, in uncapped returns. And what is happening is that probably one of them is really going to the moon, is going times 15, and hopefully for some other companies are doing well and are going for an exit multiple. But quite a lot of companies don't even survive the starting phase. For the companies 5 to 10, there is almost or even nothing going back to the investors. But this is when you are surfing the pink line. In steward-owned companies, there is the assumption that even more companies still survive because they are not pushed towards short-term profits, or they are not pushed towards an exit. So we believe that the portfolio for an impact investor can be the same in steward-owned aligned finance, saying 2 times the return, as in the very classical way. But the macro output is that there are more companies that are surviving and are really making impact. Here, companies 1 to 7 are really surviving with different outcomes. We know, but this is the real difference and the real benefit from a macro perspective. So this is the tangible zone. The pressure to become extractive is not so big in steward ownership. A lot of people ask me, yeah, but in the beginning, the startup curve, and when the moment when we ask business angels, even in that moment, there is not such a big difference in steward ownership. It's only starting when from the seed funding, then there could be a pressure to become extractive. Even in steward ownership, there could be really a high alignment with the first investors. There could be a real embracement of smart capital too. So this is what you really have to understand. And I know that steward-owned aligned finance is quite complex, but I thought that I take some time to explain how this is organized. So in the end, for investors, there is less decision-making rights, no decision-making rights. But we can't say that there are more guarantees over returns. It's more organized the way that investors can get back their money. There is a lot of lecture about steward-owned aligned finance. Just ask me and I'll share the thing that is interesting for you. And one of the German steward-owned companies said, Ines said, steward ownership is not an obstacle for fundraising. It's a good filter to find eligible partners. So for Wild, which was quite an impressive impact enterprise, it was a good thing because it brought them to real impact investors who were thinking in the same paradigm. I can say we are there not yet. So today it's way more difficult to finance in a steward-owned way. But let's hope that a lot of companies steward-owned companies can use the same words at a certain point in time, like Ines is doing. So this was about the finance part. And the other part, and we do get a lot of questions about that, is who are then those stewards? Who are the one who holding the decision-making rights? And also here there is a new paradigm. And this is what we are used to. And there is In a family business, the principle is blood. The principle to allocate the ownership and power is just blood. And my colleagues always call it is the lottery of sperm. That you are just born that way, and you get all the ownership and the power. The second one, and we know this is the one we know most often, is that ownership and power is just sold for money towards the highest bidder. In cooperatives, the entrance and collectivity, the principle is the same need or goal. And in steward ownership, the principle is ability and value alignment. So it's way different than the principle we are used to, the principle of money. So this is what these stewards are about. They are capable and aligned. They can act as full owner, and they can steer on mission. So the question, who will be the best stewards in your company, is a very good question. But the solution can be way different. Here there are 6 ways of how to organize who are the stewards. And it can be quite fixed, or even the first 10 years, it can just be the founders. And if someone is going out and somebody else is coming in. Or it can be a source for a certain period. The one who will give more decision power because he or she invented the company. Or it can be growing representatives. As the company is growing, we get more stewards. Can also be an external view. We can get the nature on board, for instance. Can also be an open end. That can be an election of everyone. We see quite different ways on how to organize who will be the stewards. Here are some real-life examples on how Steward-Owned company has organized who can be the stewards. It can be very internal, people who are really in a daily operations of a company. Some older steward-owned companies organize it also more external. Can be very democratic, a lot of stewards. It can be very meritocratic. So there are different ways on how to organize the stewards. We know nowadays quite a lot of bad practice, but this is really what has to be set up, what has to be explored in the transition towards steward ownership. And this is what will end in a pathway for stewards. Who can be the stewards? Who cannot be the steward? We do not like that an investor is a steward, but is there something wrong if only one investor can also be a steward? There are some examples where it is. We prefer not to. In startups, it can be even more difficult because you only start with 2 founders. But what after that? If the company is growing, how can we organize this? So these are just real-life examples on how to organize who are the stewards and who not. And then the last part, the very important part, we always start from this point, is the golden share model, the veto rights. Thinking back to this that you saw before, we know the economic rights, we know the voting rights for the stewards, but the veto rights are quite important. What they are doing is they protect the key principles of steward ownership, so that it's not possible anymore to change the statutes and becoming not mission-driven anymore. So they are locking in the mission-driven focus of a company. I have to say they are not making a mission lock. So a mission can change over time, but they are locking in a mission-driven focus of the company. What they are also doing is an asset lock. The company is not for sale anymore. And what it's also doing is investor protection. So it protects also the investors that Steward has no blank check, that they cannot just make more, make new shares or give as much as money possible towards their own. So there are some blocking things where the veto share has the full power on. So for a company, the voting rights, that is almost everything for a company, is just with the stewards, but there are some particular things where there are veto rights organized. This is complex, I really know, but this is the most ultimate way on how to structure steward ownership. So that is the golden share, and it makes the company not for sale anymore. So what I explained to you now are the most important principles of steward ownership. And like we say, this is how a business can be a prototype of the world you want to live in. And this is how you can become not shareholder owned anymore, but steward owned. And the complexity at first is what makes you fix into your legal DNA, when do you keep flexible? And it has to be fixed enough, but on some points it has to be flexible enough. But we do explore what is happening in 10 years, in 20 years, even in 100 years. So there are some elements of 7th-generation principle thinking in the exploration of steward ownership. But we have to make it fixed enough that mission drift is not possible anymore. This is important. There are a lot of companies who are starting with a great mission, even the big ones like Airbnb or Uber or Ben & Jerry's. Even Facebook started with a big mission, but yeah, they just had mission drift because shareholder primacy became too important. And so what if companies could never be sold anymore? What if profits were reused for the owner organizations towards even more impacts? What if those who are the most involved and aligned can hold the decision-making power? So what if one day a company is totally of itself? That is what we call steward ownership. And that's the reason why we raised a Steward-Owned via 3 SBL, a non-profit to simply accelerate steward ownership. And we were raised out of 15 ambassadors like BE.IMPACT too. So this is what's happening now these days in Belgium. People are talking quite a lot of steward ownership. We help them explore the first steps in steward ownership. Voila. So this is what Steward-Owned is doing. If you want to explain it more deeply, just go to our websites. There is things like a knowledge hub, all the relevant information about it. There are cases, there is inspiration. Voila. This is on our website. So this was my story about ownership, the paradigm shift, the externalities, and what steward ownership can bring to. So I know it went very fast. It was to trigger you a little bit in steward ownership. I'm sure that you will find ways to explore it more deeply.
Thank you so much, Peter. And as you just said, I think you were finishing with what if questions, and I have the impression that it's going to lead to a lot of questions and creativity.
For sure.
Among entrepreneurs and investors, etc. So there were a few questions in the chat. If we can take just a few minutes to answer some of them. I saw also some hands that were raising during the presentation. So maybe we'll start with Elke.
Okay.
Yeah, thank you, Peter. It was very interesting. And I got a bit confused when you were talking about the axis with meritocracy, democracy, and external, internal. Because at first I thought you said steward ownership is always internal, as people who are working actively in the company. Yeah. But then Zeiss has also external stewards.
Yeah, for sure. Yeah, that's true. We see some older examples where it's also organized internal and external. It's not if we organize steward ownership now these days, we will not propose these kind of schemes. But there is a history of steward ownership. They are steward owned, and it's internal enough. What we see in a classical company. It can be 100% external too. So this is they are still somewhere in the middle.
Thank you.
Other questions? Just go ahead.
There is a stat question, I have the impression. To see if there were more research to evaluate the resilience of these businesses, and would go actually in a direction of a question I have. With measuring, let's say, the success rates, if we call it this way, of such companies. You were saying that on the long run, they are more robust. Is there some literature about that?
Yeah, I will share. There is a platform where all the research in steward ownership is in, and there are about 116 academic articles about steward ownership, mainly in Denmark, where it's with big firms, and there are all the results. So from there we know they are more resilient. We don't know quite a lot of the new startup world. If you now are going to the impact startup scene in Berlin, they say in the first sentence, this is what we are doing, and the second sentence they say, hey, but we're steward-owned, some kind of label that our mission is protected for always. But we don't have a lot of research about the success criteria of these firms.
Thank you. Gaëtan, you had a question?
I was also curious about you expanding. Thank you first, Peter. Expanding the democracy axle in your presentation. Some of your slides briefly mention how workers can be represented in this new type of governance. But could you explain and perhaps give examples of companies that do that and that makes a balance of worker representation, which is workplace democracy, in decision making, and external or stewards?
Yeah, and what do you say? Worker representation?
Workers, employees.
Workers. Yes. Okay. Sorry, I didn't hear it. Yes, just going to look back to there is some especially cooperatives who just adding steward ownership principles to them. They are more democratic or democratically organized, but also in Ecosia there are some more democratic ways of also adding employees and workers to the stewards. But for instance, quite a lot of organizations who are more in a cooperative mindset, adding workers as their stewards. Don't mess up. Steward ownership is not cooperatives, but it has some first principles that are related. And nowadays, when we are exploring steward ownership in Belgium with some companies, we always see how can we add workers at a certain period in time when a company is growing towards the steward constellation. So it's the best way that it's not only fits to founders or to 2 or 3 people, because that is also a too much concentration of power. So it's the best way to have some more involvement, but don't mess up steward ownership. It don't has to be 10 or 20 stewards, but this is a company can decide on this herself in the transformation towards steward ownership.
Okay, thank you.
Benoit?
Yeah, thank you very much, Peter. It's really very interesting, and it was very clear. But I have a question relative to the economic rights.
Yes.
What happens if shareholders disagree with decisions made by the stewards that put the economic rights at risks?
Yeah.
And for instance, imagine they want to change the bylaws of the company or things like this. What is happening when the shareholders feel their economic rights are at risk?
Yeah, that's a good point. I shortly said something about that, but not so much. So the golden share, the veto rights, is also in the advantage of investors, because what is happening there is that they protect certain key rights. For instance, that intellectual property cannot be sold just like they want. That the other risks, for instance, is we call it in Dutch verwatering of shares. That is made impossible by the veto rights. So This is certain things, for instance, like salary gaps, that a steward cannot just earn 2 million per year from a certain period, because then there is no money left for the investors. This is all handled by the veto rights. So this is a really important thing for investor rights protection. And then another point was that we give more information rights or even consultancy rights to the investors, but no formal decision power. Yeah.
Mm-hmm.
We see that this is going good in quite a lot of steward-owned companies. Yeah, but steward ownership is a little bit more based on trust. But we organize some other checks and balances too, for instance, for sure.
Mm-hmm. Thanks.
Thank you very much. We just made a full hour. So that was great, Peter. The replay will be available shortly.
Yes.
Thank you very much, and don't hesitate to turn to Peter if you have any questions or even projects. You can help with Steward-Owned.
For sure. All right. Thanks a lot.
Thank you very much.
And you can be an ambassador too. Just tell about this to everyone who can be interested. All right.
Thank you.
Bye.
Have a nice day.
Have a nice day.